Well, good day, all. Ira Epstein, and here we are with your financial market wrap-up, and this wrap-up is for the evening. We're here now on Thursday, and we are sitting here now at, February 20th, 2025, and the time, I didn't pay attention to that. Right now, the time is we're looking at 6:05 p.m., let's call it that for the sake of further discussion. Today, the market started off on a poor foot as Walmart came out and they missed their earnings. They missed it by about 17 cents a share and the market went bonkers on it. It started extrapolating that the consumer is dead, that because Walmart is one of the strongest, if not the strongest retailer in the United States, you got Costco, Amazon, and then that's the end of it. And then you had to go in and I cover it in detail in the Spider ETF. I'm not going to do it here. All right. I'll leave it at that. Suffice to say, I still like the NASDAQ. I haven't changed my opinion. I even like the S&P here. All right. I am torn. Which one do I like more? I think they're fine. I have not been in the camp of the Dow, and I've not been in the camp at all, as you know, of the Russell. The Russell for me is problematic until I see that interest rates are on a path to falling. They don't have to collapse for me to suddenly find that I want to own that. But they have to show that there's a path, and I'm not seeing it yet. When you and I step and we look at all the energies, you broke really hard in the nat gas. The weather is changing. It's 25 in Chicago. I woke up again. It was 3 degrees outside without wind chills. We're going to be in the 40s next week. You're going to read the Texas, this whole area. It's all warming up now. We can get a cold spell again, but I'm going to keep saying it to you. Each day you're getting more sunlight, and that means it's harder and harder to stay cold. And that'll stop the demand for the energy. And you had a good, I think you took 195 billion cubic feet out today. So we knew that was going to be big. You're going to see this week when we get next one, report comes out next week, it's going to be another big draw. How much of the country's been freezing? And it's not over. Out east, it's going to be cold for a bit. In the interest rates, today was an interesting day. The stock market was dropping pretty hard, 600 points in the Dow and so on. It's not as bad as it could be because you're so high on a relative basis. And when you look at these big drops today, down 1%, 1.5%, it's not a big drop. I remember going through an 8-10% drop in one day. And the only reason I'm still here is our office was on the first floor. When we take a look at the E-mini weekly S&P, you can see how the market is sitting here and it's over the 18-day average of closes, still bullish. This is not a bearish formation. It doesn't mean it has to work. But what this does is it pushes prices up until they try to break out to the top side. It's a rising wedge. We'll see what the market does. When we look at the pattern on the chart, today's break took you out of the clearer pattern of higher lows, higher highs. You have a higher high, but a lower low now. You're not at the 18-day average of closes, but the bias is still up. The resistance is right here, which you hit 2 days ago, the upper Bollinger Band. I haven't changed my opinion on that. And until you lose the embedded reading, which happened today, with the red line closing underneath 79, I contend that the pros are going to buy this market. There's a way to do it. I teach it in my enhanced Bollinger Band course. Go to iraepstein.com under the word education. Isn't that amazing where it's at? It's very interesting. Okay. When we take a look at the NASDAQ, well, the NASDAQ got up to the Bollinger Band 2 days ago, but it kept its bullishness. Higher lows, higher highs. And it is fully embedded and has been. So to me, this is stronger than the other markets that we just looked at. And the weakness comes into the Dow. Take a look. Does that look to you like a bull market? That's not a bull market right now. That is a higher high, lower low. It came down to the Bollinger Bands. And as you can see, held them basically. The 100-day average in green is here at the 43,902. It could still go there if you wake up in the morning and there's more bad news for whatever reason, and the market goes down. And in the Russell, you're right back to the lower Bollinger Band, holding it. If it let go, then look for the 100-day. I'm sorry, the gray line is the 200-day average right here. that's where I'd look for major support. But I'm not seeing anything. The markets that I have been saying are not the ones that I have liked, have been the Dow and the Russell, and I've been consistent on it recently. I don't see a trend here to trade in the 10-year note. I see lower highs, higher lows, right into the 18-day average, not doing much. And you had a bear market rally that carried into the 18-day average here, and the market sort of just died on you. I don't see anything there. In the dollar index, I did a special report yesterday. I asked you all to go look at it. I know we've had a ton of people look at it. My reports are only up 3 business days. So you've got tomorrow to look at it, use it over the weekend, then it'll be gone. Got it? So you've got to be careful. By Monday, it disappears on you. And take a look at what I said. I can share with you it's bearish. I can share with you I'm smiling right now because the report looks right at this point in time, and you'll see why. In the euro, not strong enough here to get up to the upper Bollinger Band. A little surprising. I would have thought maybe it could reach for it, reaching for the stars. The trend is certainly up, but you're in overbought territory. Both numbers are not going sideways over 80, and you have a reading over 70. Overbought. Overbought tells me on my checklist, gee, I have a checklist and I hit it. And I used to do it that way. Oh, that's not right. No, don't do it. And that's how you teach yourself. You teach yourself with a checklist. Eventually, it's all mental. You're looking at it, and you try not to forget what you're supposed to know. That doesn't mean you'll win. It means it's a checklist, and you want to do the right things, even if you're wrong. It means you've got dollar risk up there. You're looking at what the trends you think it will be. You have your objective in the market, so on and so forth. British pound up to key resistance now, the 100-day average, the upper Bollinger Band. Certainly a place I think pros are taking some money off the table. Bitcoin came back to the 18-day average. You know, it's hanging in there in part with the NASDAQ, which hung in there today too. I know that things were down, but they're acting pretty good considering what everything is. And you're now honing in on resistance in Brent, in WTI, right at the upper Bollinger Band, heating oil, and you're pulling back into the Bollinger Band. And if you lose the embedded reading, which I suspect you can as early as tomorrow, you've got a gap in this market that you might come down and start filling. We're going to find out how that all works. Remember, tomorrow, I will be doing, I hope it's tomorrow, I want to do your weekly charts for you. So I either do it tomorrow or do it Saturday, but I want to get the weeklies out, and I want to do them early in the week so that we can all look at things, see what the market's doing, and see what President Trump does, because there's many things. By the way, Kash Patel was passed by the Senate. He's the head of the FBI now, and our U.S. envoy, Jack Kellogg, did meet with Zelensky today. You heard how the president's called off the whole meeting. It came back. Again, if you're trying to figure out Trump, you can write a book on it. It's very difficult. He's alienated everybody, and then he pulls them back in. It's difficult. That's saying the least. And how many more people are getting fired out there? And I feel so bad for all of them. It just, you know, I'm human. You don't want to see that. I want to remind you, you want to go take a look at the report, our special currency report. Just go to iraepstein.com. It's on the top left in bright green. I cover for you price counts, seasonality, all different lengths of seasonality, both the futures and the UUP ETF. So take a look at it, both on a daily basis and weekly basis on the charts. You'll get a pretty good picture of what I'm looking at. iraepstein.com. If you have a PC, move it up there. You'll see an icon. Click it. It'll take you right to it. I'm Ira. You have yourself a great weekend. I'll pick up with you. You'll see me there, and I'll catch you live. Well, not live, but my next recording during a business day, Monday morning.